What's up, guys? Nick here. And this last week was really crazy. As you guys can see, just like that, I have a market gain of $2,420.97. Now, if you remember last week, my portfolio was down by over $2,000. And if we go over here to my overall, I have a market gain of $1,707.68. And last week I was down over $700. So just like that, the market had a rally. However, I do want to point out that this rally that we just had recently is known as a bear market rally or a bear market bounce or a sucker's rally. And I want to direct you guys over here to this article my uncle sent me. It's called the Yahoo Morning Brief, and he sends me these about every single day. And here's a picture of the S&P 500 during the financial crisis. As you can see, in October of '07, its market started going down. Then it had a 7.7% jump. And then it went down again, and then it shot up. It had another bounce of 12%. It goes down, shoots up 7.4%, went down a lot, had an 18.5% rally. Then it shot right back down. And then it had a 24.2% rally. And then it just kept sliding down. And it came up a little bit. Then if we go to the tech bubble crash, as you can see in July of 2000, the market started going down slowly and it would have a 7.7% bounce, 8.6% bounce, a 19% bounce. Then it would go down and have a 21.4% bounce. And then it goes up and down, and then I had a couple 20% bounces. So I just want you guys to keep that in mind that even though the stock market's going up right now, it's probably just a fake out. It's probably just a sucker's rally. So don't get too excited because we're probably still going down, but it is something that's interesting to look at. So as you can see, the current value of my portfolio is over $45,000. We're at $45,084.18. And I earned $75.47 in dividends. And we didn't have much activity this week. In fact, the only activity was depositing $125 on the 21st, and then one buy order of SCHD, which is $144.82 for 2 shares. And so, like I said, not much going on there. So now what I want to do is show you guys what I've learned from my worst performing stocks. So if we actually go over here to holdings, filter it by unrealized gain and scroll to the bottom, you can see my worst performing stocks. We have NUSI, QYLD, and 3M. Even though Clorox is one of my worst performing stocks, I really don't want to put them on this list because I bought Clorox as a defensive consumer staple. And of course, the pandemic happened and Clorox shot up because everybody was using cleaning supplies and just being more hygienic. And then, of course, you can't replicate the pandemic highs of sales and revenue. So Clorox has tanked since then. However, I still hold it based on my original thesis of it being a consumer staple for cleaning because you're always going to need cleaning supplies. So let's actually go into NUSI, and this says I'm down 27.29%. But let's click over here. Let's see, I don't need that. Let's look at NUSI here because it says I'm down 38.38%, which that would actually be even worse because that takes into consideration the dividends earned. So if we go over the first lesson, which we can really do it with both Q yield, with NUSI and QYLD, because I have it right here. You can see I'm down 17%. The thing about these income funds is I bought them for The first reason, I'll be honest, I bought them because of the high dividend yield. And the second reason I bought them was because stocks were so expensive that I just didn't want to buy such expensive stocks. I wanted the dividend yields. So if we go scroll down here, I just wanted to show you guys the dividends from NUSI and QYLD over time. As you see, January was the huge QYLD dividend. February is the more realistic dividend. So the thing is, even though, I bought these stocks, probably shouldn't have bought income stocks, because that's why I'm switching over to SCHD, getting the high dividend growth. Because as these funds, NUSI, QYLD, RYLD, even JEPI, as they go down in value, so does the premiums from the covered call options. But if we look, even though NUSI is down, we can check their dividend from February, 13.13. March was a high of 13.58. Then April, it went down to 12.84. And May, it's gone down to 12.32. So, and I want to say the payout is going to be lower for June. And also with QYLD, we had a February dividend of $24.79, $26.86 in March, another $29.04 in March. April, we had $28.40, and then no dividend for May. We had 24 cents or $24.72. So I'm not going to sell my covered call ETFs. I'm going to keep them here in my portfolio. When the stocks rise back up eventually, who could be years, I'm sure the dividends will increase as well. But right now, they're still providing me the dividends, so I just hold on to them just in case. So next, I want to talk about 3M. So 3M is a company, it says I'm down 19.42%. They're my third worst stock. And I actually bought 3M because I was at my job and I needed tape. And when I found tape, I looked inside and I saw that it said 3M on the inside. And I thought, if I need tape here, I'm sure there's other businesses that need tape and 3M products. And I'm sure there's a ton of individuals that use 3M products. And I'm sure that there's other businesses, offices, you name it, that use 3M products. I've actually also heard a saying that if you walk 10 feet or something, you'll find a 3M product. And I had also done quite a few hours of research before on dividend paying companies, dividend growth stocks that have been paying for decades, and 3M was on that list. Now, what I didn't do, and what the lesson you guys can learn here, is I didn't dig really deep on the research with 3M, because I've mentioned this in a previous video, but they're currently in a major lawsuit with veterans and current and former military members over hearing loss. Their earplugs have caused people hearing loss. So that's a major lawsuit, and that could be a concern in the future for 3M and their dividend. And another thing I want to point out is if I go to my main portfolio, I go home, oh, not there. If I scroll down to 3M, this was one of the stocks where I lowered the allocation to 1%. And I want to say 3M used to be probably as high as 4%. And if we also go down and check the quadfecta, as you can see, it's currently 15.7% of my portfolio. And as I invest more money into my high dividend growth stocks like SCHD, TXN, Home Depot, American Waterworks, Microsoft, Costco, the allocation for the quadfecta will go down. because right now my goal is just get those high yield, not high yield dividend stocks. That was the problem before. The goal is to get those high dividend growth stocks right now, because over 10, 20, 30 years, those dividends are going to be massive. As I showed you with SCHD, over a 20-year time period, if they keep their dividend growth rate, and if you keep investing, that dividend is going to be 16 times higher than it is today. And we can finish up here with just my dividend growth chart. I don't think I've added any new dividends since my last video, because I'm still at $1,072. I think all of my dividends are going to come after this video. Over the next week, I should be getting the QYLD, RYLD, SCHD, NUC, Pepsi, Good, and LTC. So I'm thinking this could be a record-breaking month. I don't see any reason why we can't beat March of $229. But guys, that's the video. Thank you for watching.